Welcome to TaxWit's Wealth Protection Podcast, where we demystify the legal and tax issues surrounding wealth creation and protection. The content presented in this podcast is for informational and educational purposes only. It should not be construed as legal, financial, or tax advice. While the hosts and guests may be legal professionals, they are not your legal professionals. Laws and regulations vary by jurisdiction, and the information discussed in this podcast may not be applicable to your circumstances. Always consult with qualified professionals such as your own attorney, accountant, or financial advisor for advice tailored to your unique situation. In today's episode, we're going to turn the tables on the IRS and expose exactly what to do if you find your tax returns under the microscope. Whitney is a tax attorney and CPA with over 30 years of experience serving clients in Arizona and throughout the United States. So Whitney, before we dive into your time at the IRS, let's talk about the IRS's new initiative to investigate tax fraud using artificial intelligence. For you listeners out there, on September 8th, the IRS issued a press release claiming that it is going to start using artificial intelligence to investigate tax fraud. And so, Whitney, I just wanted to start off by getting your thoughts on this.
Yeah, hi, good morning, Ben. So this was just announced by the IRS September 8th, so about 3 weeks ago. The IRS is going to use artificial intelligence, and initially it kind of sounds pretty scary. But if you read the article, really, the artificial intelligence portion of the new technology is for uncovering and selecting tax returns for audit is what the initial use of artificial intelligence is going to be. And, you see this article from the IRS, their announcement, and they really spend a lot of time saying, we're going after the wealthy people, and we're going to put, we're not going to add more burden to people that earn $400,000 or less. We're going to increase the audit rate for people that are earning $400,000 or more. And the artificial intelligence portion is primarily for large partnerships. Now, let me tell you, partnership tax returns and partnership tax laws are for sure the most complex of all the tax laws. And so if you have a C Corp or an S Corp, or you're a sole proprietor, your tax is a trust, let me tell you, being taxed as a partnership is by far the most complex of the tax animals. From a lawyer's perspective, we love them because they're so flexible. We can really do a lot with it. But from a compliance perspective, it's a lot more difficult to manage, and you really have to know what you're doing. And then there's a lot of moving parts. So, but and so I can imagine that the IRS does want to use some artificial intelligence for selecting and reviewing tax returns. The other thing that I thought was interesting about the IRS article is it suggests its initial use of artificial intelligence is for large partnerships. So these are partnerships with, billions of dollars in assets. But then it kind of comes down and mentions partnerships with a balance sheet with $10 million of assets. And you'll see there's going to be a greater focus on partnership issues through compliance letters, and they're looking at partnerships with a balance sheet of $10 million of assets. And the interesting thing that they say is, look, we're looking at, so when an IRS agent is auditing a tax return, there's the common perception, he's going to come out and ask me for my receipts and cancel checks. Yes, they're going to look at your receipts and cancel checks to make sure you added them up correctly. But really, from a seasoned IRS agent perspective, looking at receipts and cancel checks is, kind of not that exciting to do as a job, coming out and going through a box full of, 1,000 receipts and adding them up. But that's not where you're going to find the big issues. You're going to find some things that people are just, adding on thousands of dollars of expenses they didn't really incur. But that's not really where the big issues are. So once you become a more seasoned IRS agent, you look at the balance sheet. We call it balance sheet auditing. and you're going to look at discrepancies on the balance sheet. And those balance sheet items are going to show you where in the books and records. So you're going to look at the adjusting journal entries and see where they are correcting their mistakes they made through the year. And you're going to look, and so what the IRS mentions is there's a lot of discrepancies on balance sheets between the ending balance of the prior year and the beginning balance of the next year. And how can you possibly show a balance sheet with, a certain dollar amount of assets, on the ending balance in one
When
year?
the clock strikes midnight,
All of a
suddenly
sudden,
it's a different number.
And so, I mean, that's got to be a terrible way to file a tax return if you're a professional. How do you even file a tax return when the ending balance of last year doesn't meet the beginning balance of this year? But there's a lot of that, apparently, and the IRS says, we're looking at that. So item number one, if you're a CPA or if you are a business owner and you have a partnership or a corporation or an S corporation and you're filing a tax return, make sure your balance sheets are balancing. It's not that difficult. It's called generally accepted accounting principles. You follow them. And whatever the balance is last year, not too difficult to put that as the balance, beginning balance of the following year. So the IRS article about the artificial intelligence, it really suggests that it's going to use artificial intelligence to look at large partnership tax returns and figure out how to select those tax returns for audit. It's not using artificial intelligence for everything else. Well, at least this article suggests that that's really the primary use. And I could see that. I mean, it's a really complex set of rules. And
so you think overall this is good for the American taxpayer?
Well, I mean, so it is good for the American taxpayer unless you're part of a very large partnership. Not so good for you.
Right.
You might be getting audited soon, and you're going to be dealing with artificial intelligence, which is kind of like playing chess against a computer. So I wouldn't want to be playing chess against a computer. So if I'm a large partnership, I'm probably going to ask my compliance people to spend a little extra time and make sure that they build a file. And I think this is another point that people from a compliance standpoint, business owners, when I prepare a tax return, I don't prepare tax returns anymore, but when I did prepare tax returns for clients, or today as a lawyer, when I'm working with my clients and working with their CPAs, and we oversee the process. Sometimes we talk about strategy and how we're going to handle certain difficult issues on the tax return. But I tell my clients, you should have a file at the end of the day when you prepare your tax return and file your tax return. You should have a file that walks through how you got to each number on the tax return. So I had, these expenses. Here's the check register. Here's the canceled checks. We categorize our expenses in QuickBooks or whatever software we're using to keep our books and records. Well, all right. So those numbers add up to a certain number, and that's what's on my tax return. And there should be a real easy audit trail. It shouldn't be difficult to do if you're using an accounting system. And if you're a big company, you should be. And so you should have a file that has the work papers that gets to each number on the tax return, including the balance sheet and the income and expenses. And those numbers should, reconcile to bank statements and supporting documentation like that. So it shouldn't be terribly difficult to defend against the audit if you do it that way. And I think, sometimes I get clients in the door, and you'd be surprised, Ben. We have clients that have big money and big tax returns and lots of partners. And we look at the books and records and the work papers, and I'm trying to figure out what they did, and the accountant that I'm working with is trying to figure out what they did and why. Well, it shouldn't be the case. You should have some notes in your file. So from a compliance standpoint, if you're a taxpayer, maybe put in a little bit more effort and open your eyes. So when you file your tax return,
Okay.
you feel good about it.
So big takeaway here, it sounds like there's some known discrepancies on these large partnership returns and similar returns. There's also some known schemes and scams out there that different, industries are falling victim to, and they're going to use artificial intelligence mainly to identify those discrepancies and those issues. And then so when we think about what can we control as business owners, you're saying make sure that you're documenting, everything you need to take your business expenses, and then also that your CPA or your whoever's preparing your tax returns is taking the time to build out a file to support any numbers they're putting on that return. Is that right?
Yeah, and I would think most of the better CPAs should know this, but there's a
It's
lot
kind of
of
table stakes, isn't it?
Yeah, it really is. I shake my head at some CPAs that walk in the office or giving advice to a client, and they give advice that I'm thinking I would never tell my client to do that. I had a client come in, and he's just been getting his butt kicked by the IRS every step of the way, and he's making all the rookie mistakes. And I asked him, well, your CPA prepared this return. What did your CPA say? And is your CPA, has your CPA been helping you? And the client says to me, well, my CPA just said to call the IRS and be honest. Listen, if you're getting audited, do not talk to the IRS. The IRS is trained on how to ask questions to solicit a specific response. And believe me, I was in those training sessions. And the branch chief
That's a
at that
perfect
time.
segue. That's a perfect segue into the next juncture of our discussion. Is tell us a little bit about that. How did you find yourself working for the IRS, and then what was it like?
Yeah, it was pretty interesting. So when I uh, came out, I had a bachelor's in finance and then a postbac in accounting, and then went and took the CPA exam. And we had a family friend who was senior partner at Deloitte and Touche, and I really kind of thought that I would end up there. But at that time, the accounting world was in a tailspin. The big eight was slimming down to the big six, which is slimmed down even further. And they were laying people off. And so I was at a job. I was just walking through the ASU campus one day, and there was a job fair. I didn't know it was going to be there. And apparently I filled out some information at a booth for the Internal Revenue Service. I kind of forgot that I did it. I was at home one day, and I get a call, and it was the IRS. And I was kind of like, oh my gosh, I'm getting audited by the IRS. But then I was thinking, heck, I've been in school. What are they auditing me for? And so the guy says, hi, Whitney. This is Lou from Internal Revenue Service. I see that you've been picked up by the Houston Examination Division, but I'd like to know if you want to work here in the Phoenix district since you're from Phoenix. And I said, wait, what? Picked up by the Houston Service Center? What are you talking about? And he says, oh, yeah, you didn't know? Well, the Houston Service Center or the Houston District Office exam branch saw your resume that you submitted at a job fair here, and they've picked you up. And I saw your resume, and I was wondering if you'd like to come in here and work for us here in Phoenix. And I'm like, well, heck, I don't want to move to Houston. And so I went down and met with them, and they gave me an offer, and I went through the training program, which was pretty excellent, by the way. So new revenue agents, I think we were in classroom for about 5 months. And then we had on-the-job instruction. So we were out with a seasoned agent for another couple of months. And so I really had I would say about 9 months that it was just pure tax training, teaching you the tax laws, teaching you preparing tax returns, reporting, and supporting the numbers on the tax return, and basically all about compliance. And it was a pretty good program, and that's how I ended up, working for the IRS.
Is it true that IRS agents carry weapons?
Criminal investigation,
True or false?
yes. True. Criminal investigation agents. Yeah, so I was a revenue agent. So when you look at the IRS, the structure of the IRS, and so let's look at exam branch, you have a kind of several different levels of revenue agents, or auditors, we'll say. And so you have these correspondence audits, and a lot of times when you're arguing in a correspondence audits, you're arguing with a computer. Correspondent audit is where the computer says, hey, we got a 1099 that says you received X number of dollars, but on your tax return, you reported only Y number of dollars. We're going to make this change unless you can give us information that shows otherwise. And so you're going to get a letter that's basically generated by a computer. Probably no real person is looking at that any deeper than getting the letter out. And then you're going to have a tax audit. We call this office audit. So an office auditor technically is not a CPA or someone particularly trained in accounting. So the revenue agents, the field agents, the people that come out to your business, come out to your house, and meet with your CPAs and your tax attorneys in their office. Those are field agents. Those people are almost all, and I would think all, are accounting trained people. They're accountants. Not all of them are CPAs, but most all of them have an accounting degree, or a equivalent of an accounting degree, number of accounting courses. So, but then you have these office auditors. The office auditors, honestly, are people that work for the IRS for long enough that we had to promote them somewhere. And well, heck, your next promotion is going to be as an office auditor. You go through some training on some tax issues, and then you're auditing taxpayers. But the office audit cases are the smaller cases. They're not the more difficult issues. So you're not going to be having an S corporation or a partnership tax return audited generally by the office audit group. You're going to have Schedule C, sole proprietor tax returns, on some basic issues, and not the more difficult issues. And once you get the more difficult issues, then they kick it out to exam or to the field agents, and the field agents then come and meet with you. So you have this office auditor, and I got to tell you, when we're dealing with office auditors, so I'm on this side now, I'm representing a client, and I'm dealing with office auditors. I'm not going to spend a lot of time with them. I'm going to give them the basic information, and when they want to, take it further, I just say, give me a report, and I just go to appeals, because you're not really talking to someone that knows that much about tax laws and accounting, and they don't understand a lot of real world stuff. And you get these agents the office auditors, and then new field agents that are the younger ones. It's like they are drunk with power. They don't really see things from a more reasonable, logical, and standpoint. So we just take those two appeals and get someone with some brains that has some experience behind them. We'll look at this and say, yeah, right. Most of the cases that I get from office audit that I have to take to appeals, those appeals issues are substantially thrown out by appeals, which makes me look good, So the office auditor says, you owe $15,000, and we take it to appeals, and you owe $1,200, and that happens a lot. I mean, and by the way, I've seen a lot of cases recently from the office audit groups, and they're throwing these things out, and my client owes hundreds of thousands of dollars. You get zero basis for that house you built and sold for, $3.8 million. It's all income because you have zero base. Okay, so what you're saying, that's a great case for me to take to appeals, because the appeals officer looks at this and says, all right, another one of these cases where the IRS says you got this $3.8 million house for free and you built it for free and you sold it and it's all income. Yeah, obviously we're wrong. Obviously, this is not going to hold up in court. We're not going to go stand in front of a judge and say, Judge, no basis. They got it for free and sold it for $3.8 million. So those are great cases for you to take to appeals.
That situation, how does that present itself to the taxpayer? Do they get a letter saying that? Or is it someone knocking on their door? Like how for an office audit? What
happens is so how an audit starts is you get a letter from the IRS saying, hi, I'm the friendly IRS guy. And if it's an office audit or a field agent, I'm your friendly neighborhood IRS guy. I'm just helping you by taking a look at your tax returns to make sure that your CPAs did a good job and reported everything correctly. And so, oh, by the way, would you please give me all of this information? And here's what it's going to look like. We want all bank records for every bank account that you have, including all of your canceled checks. And they might not ask for deposit offsets up front. And then we want your general ledger for your whatever accounting system, and your sales ledgers, and your expense ledgers, and your end of year adjusting journal entries, and your reconciliations, and your work papers that your accountants use to prepare your tax returns. And, so it'll just be like this wide sweeping list of things. It's basically everything possible. And you're looking at that, and there's a list of, 30 things on this, standard form. And it's pretty daunting, overwhelming of all this stuff. And you're like, I don't have half these things. Well, you know what? You might not have half these things. You give them what you do have, right? That's why I said at the beginning, you should have a file with the things that you do have that leads to the number that you put on the tax return. And then when you get that letter, you just hand them that file and there it is. But if not, then you got to go back and recreate that file, which is always a lot more difficult, recreating things after the fact, right?
Right. So hope for the best, but expect the worst. And
yeah, well, you're thinking, we changed this number last moment for a reason, and I can't remember, but you're talking to your CPA. Remember when we did that and there was something that caused us to change that number from X to Y. We were talking about that, and I see the note there, but I can't remember exactly what document we had that supported that change. You should do all the documentation, keep that file at the time when you're filing your return. But okay, so you're gonna get that request. Here's a clue. What is it that they're really looking for? Well, when you see that information document request is what the IRS calls it. Information to IDR number 1 with all this stuff. At the bottom of that IDR, probably the last thing or in there somewhere, you're going to see a specific reference to certain specific things. And so they're going to say, and for example, in addition to these things, specifically show us all your canceled checks and receipts for meals and entertainment and labor and commissions and travel expenses. So we know, hey, here's what they're really looking at. So when the IRS agent gets a case, and this is how it looks from the IRS agent's perspective. I'm sitting in my office and someone wheels in on a trolley, 10 boxes full of little files. And, one of those boxes makes it over to my desk. And so I get this box of all these files and I pull out the file and I look at the charge out and I look at the tax return, and I do what's called a pre-audit. I look at the tax return and I think, what's standing out to me? So I'm going to look at expenses and income and see what stands out. Well, if I'm looking at a realtor who has $20,000 of expenses for auto expenses, well, I'm going to expect the realtor is driving all over town all the time. They're going to put 16,000 miles, 25, 30,000 miles on their car because that's what they do. But when I'm looking at a architect and he has $25,000 of auto expenses, where's that architect driving around town every day, acting, performing his services as an architect? I would not expect to see that. So what I'm looking at is, what is this taxpayer? What is their profession? What is this business? What would I expect to see? And that's what I think about first. Then I look at the tax return and I see, what do I see? Well, I see some things I don't expect to see. So I'm going to look at more closely at those items. And now I'm going to look at large and unusual items. So,
and all you have at that point is their tax return that they file. Third-party filings, which is like, what, 1099s? What else do you get? What's in that file?
Yeah. And so you're going to see what we used to call is an IRP document. Today, if you're a taxpayer and you want to see what this IRP document would look like, it's called a wage and income transcript. And so on the wage and income transcript, and you can get this. Anyone can call the IRS and prove that you are you. And once you do, say, I want to get my wage and income transcript. And so when a client walks in my office and says, hey, I didn't file my tax returns for 18, 19, 20, 21, and 22. Well, I don't have those records, and we moved and there was a flood and whatever. Go and get the wage and income transcripts. That's your starting point. Get your get your bank statements. That's your next piece of information. And your wage and income transcripts are going to show 1099s, 1098s, W-2s, K-1s, any of these types of things that were reported on you. Maybe Form 8300 cash transaction reports. We heard a lot about this with Hunter Biden. He had all these cash transaction reports. And you'll see this anytime that you're receiving $10,000 or more in cash, or you're transacting. So if I'm handing you $12,000 or $50,000 of cash, I'm going to give you that cash. I'm going to file that cash transaction report. Anytime I'm receiving it, and I walk down to my bank and I have a suitcase full of money and it's $100,000, the bank is going to file a Form 8300, a CTR, and they're going to report that to the IRS. He walked in with $100,000. Is that illegal? No, not illegal, so long as you're reporting it, right? And so this happens a lot. So when I was an IRS agent, we were first learning how to go online. And so there is a system in the Internal Revenue Service for agents to go and find these, and to find different cash transactions and different types of these types of reports. Today you have this guy Mendez in New Jersey who's, well, heck, if he had all of this cash and these gold bars and stuff, whoever's handing him those things should have filed a cash transaction report. And if I'm paying someone in cash and I'm going to take a deduction, I better have a CTR, or else I'm out of compliance and I could be penalized for not issuing a CTR to that person. And what the IRS will do a lot of times is if you didn't issue a 1099, then when you should have.
And I just want to be clear for our listeners here, Whitney. We're referring to Senator Bob Menendez. Is that right?
Bob Menendez. Yeah, that's right. Right.
And he's been indicted on bribery charges.
Right.
Is that right? Okay.
Right. So, and I suppose if you're bribing someone, you probably don't want to make that a public record, so you're not going to file the CTRs, right?
Right. Okay, so it's kind of circling us back here. So you're sitting at your desk. You have the file for the taxpayer. You have you have the tax return they filed. You have everything that third parties file. Those cash transaction reports, 1099s, 1098s. So all of those third-party filings. Do you initiate the audit notice, or by the time you've gotten the file, the system's already sent that to the taxpayer?
Well, no, as a field agent, I'm going to be the one that makes that first contact. And I think probably with the tax auditor, that's the same. With a correspondence audit, it all starts with a computer and there's no one involved. But with the field agent, I'm looking at the return and I'm looking at the IRP documents. I'm looking at your 1099s and W-2s and K-1s and things. And I'm going to make that initial contact. A lot of times, that initial contact, so when I was there, what we would do is we would have a phone call. And before we got the letter, our audit notice and our information document request in the mail, I would make a phone call to the taxpayer. And I would say, "Hi, Mr. Jones. My name is Whitney Sorrell of the Internal Revenue Service. I'm a revenue agent. Your tax return has been selected for audit. And can I have just a real quick conversation with you? So I want to ask you a few quick questions just for starters. And then I'm going to send you some stuff in the mail. And then we'll come out and I just want to come out and meet with you and your tax preparer if you want. And you do have the right to be represented. And so I would ask to talk to them. And let me tell you, if I'm defending you and you're my client and I am your CPA or your tax attorney, do not talk to the IRS agent at that time. You have to talk to the IRS at least once. You must give the IRS one interview, okay? Do that after you've been prepped by your tax attorney and in the presence of your tax attorney. And then after that initial that initial interview, you don't have to talk to the IRS ever again. They get one bite at the apple. So don't talk to them on the initial phone call. This is what I'm going to ask is things that I've looked at your tax return and I have specific things I want to ask about. That initial call, I'm going to put you in a box. I'm going to get you to give me some answers to some things that now you're in a box. And later, when you discover what I'm really trying to get to, you're going to find that your prior answers already put you into a box and you're kind of sunk. And so there are no more explanations at that time. And so as a revenue agent, I know that I want to do this. I'm asking you questions on purpose. For this exact reason, I want to put you into a box. So from a taxpayer standpoint, do not answer any questions. What you do is you say, what's your name? What's your phone number? Where's your address? Okay. Are you a revenue agent? Are you a tax auditor? What are you? Are you a criminal investigation agent? Are you a revenue officer? Revenue officer is different. A revenue officer is a collection person. That's not a examination. They don't determine how much you owe. They just want to come collect the money. The revenue agents and the tax auditors determine how much you owe. So figure out who are you talking to and get their contact information. Tell them, I will have my power of attorney contact you. Thank you very much. Hang up the phone. Don't need to answer any more questions. You don't even need to say goodbye if you don't want to. Just get that information. Tell them your power of attorney will contact them. Get a fax number if they have one, or an email address if they have one, and then hang up the phone. Just hang up the phone. Don't talk to the revenue officer at that time, because let me tell you, I'm asking you specific questions and I want to catch you by surprise, and I want you to put yourself into a box, and now you're sunk on those particular issues. Back to this article though that the IRS put out, talking about the artificial intelligence. The interesting thing about this article is it talks more about that, and it kind of tells you what is the IRS focus right now. And so the focus, and by the way, when I was in grad school, remember I did my MBA at night while I was working at the IRS. My thesis in grad school was on who does the IRS audit and why. Now we could talk about that, my thesis, another time. It was not publishable because I had the IRS from the Detroit database, the Detroit computer system or whatever it was called. They had their initial their primary data. So this is the IRS's statistical data on taxpayers, and so I had access to that as my statistical data for my paper, and it was interesting. We'll talk about it another time, but what it told me, and is what this article is telling you, is what are our priority areas for targeting compliance? So abusive micro captive insurance arrangements. So captive insurance. If you have captive insurance, you're on the radar. So what's captive insurance? So a captive insurance company is a great planning tool, and it's not all abusive. A lot of it's good planning, and we do this for clients. And so what I'm going to do is I'm going to have insurance. So any company has insurance for different things. We insure against errors and omissions. If you're in the professional world, malpractice insurance. We're going to have insurance for liability, for cars insurance, right? Someone, we have a fleet of cars and someone gets into an accident. We're going to have our liability insurance, and we're going to have all kinds of different insurance things that we can insure against. What about insurance against a employee that's particularly important, and if that employee dies, then we don't have that person, and we have this gap period of time, and so we have key employee insurance, and we have all these different things. Well, there's lots of things that you can't get insurance against. Okay, terrorists hijack airplane and fly it into my building. I can't get insurance against that, and so there's gaps of the insurance policies that we have. And so what we'll do is we'll go and start our own insurance company. And the interesting, the tax planning thing about this is from the first $1 million of insurance premiums that insurance company receives and doesn't pay out is tax free. So you don't pay tax on the first $1 million. I might have these numbers might be changed since last time I looked at it under current tax laws, but
so for the operating entity, it's an expense. It's a premium paid to another company.
Well, yeah. So my company is going to pay my captive insurance company over here $1 million of insurance for things that I can't otherwise insure against, and my captive so I'm going to take a tax deduction over here in my operating company. My captive insurance company is going to receive $1 million. It's going to have some risks and things, and you have to be in a risk pool. So you're going to get into a risk pool of other people that have other captive insurance companies also, and there's going to be some claims that are going to be made. So you might pay out of that $1 million, you might pay out $100,000 in claims and $50,000 in expenses, and then you kept $850,000 of cash, and you just keep that in cash, and that cash is that's not, so there's no taxable event there. And so basically I've taken an $850,000 deduction, or I've taken $1 million deduction on my real business, and I've got $850,000 back in my captive insurance company, and that's distributed to me as a dividend, and I got $850,000 through dividends in my captive insurance company. So I'm going to pay tax at the dividend rate. And so in any case, there's a type of arrangement that kind of works like that. This isn't exactly how it works. I'm kind of oversimplifying some things, but this is what a captive insurance company is all about. And so they're going to take a look at these. And so what you have is people that are putting money into their captive, but they're not in a risk pool with other captives, or they're insuring against things that are just so. I'm insuring against a terrorist running their airplane into my building here at Scottsdale Airport. Is that really a likelihood? Is that a real risk? And so we have things that aren't real risks. And so the IRS are looking at these abusive schemes. Digital assets. They're going to be looking at, they say there's a 75% tax gap on cryptocurrency. This is a big focus. If you have cryptocurrency, you're using it to buy things, you're using it as an investment, you need to start reporting that, and there has been very little reporting. And so I would think that there might eventually be using artificial intelligence for the cryptocurrency audits and compliance issues. The FBAR violations. So the FBAR violations are foreign bank account, foreign bank financial accounts.
That's always been an issue, right?
It really has been over the years. They've had different initiatives from time to time. They'll come out with, hey, we have 3 years. We're going to open an FBAR. Come on in and tell us that you didn't do it right, and no penalties so long as you disclose everything and get in compliance. And so they're probably going to have another one of those initiatives where, hey, we're going to give you a time period, a window. Come on in and voluntarily comply when you weren't. But I'm going to tell you, if you have $10,000 or more in a bank account outside of America, you need to file an FBAR. You need to disclose that bank account. All you have to do is disclose it. And I'm telling you, I've had these cases where a client had a $14,000 balance in a bank account in Panama or wherever. For whatever reason, usually legitimate reasons, they were working there and they kept a small amount of money in that account. And now that they don't work there anymore, well, they still have that bank account because maybe sometimes they'll go and visit Panama. It's a nice place to visit, right? And well, now you've got these huge fines. I mean, I've had clients come in and they've got hundreds of thousands of dollars in penalty because of this $14,000 bank account overseas. It's crazy. The penalties are outrageous. I think unconscionable, but that's the way it works, and it's a big problem. And then in this article, as they're going through this list of things, they make sure the IRS is on the side of taxpayers. We'll be working to protect hardworking people from scammers and fraudsters. So they have
an interesting spin.
Yeah, right. And we're going to have improved equity in audits. And how do we improve equity in our audits? Well, improvement in audits involving earned income tax credits. What does that mean? Improvements in equity involved in earned income tax credits. Here's what that means to me. There's a lot of fraud in earned income tax credits. The earned income tax credits basically is where people that don't report any income report in a way that not only do they not pay any taxes, but they're getting $10,000, $20,000 in refunds. So they never paid any taxes, and they're getting a check from the IRS for $10,000, $14,000. And what's happening is that they don't really qualify for it, but they have these abusive tax preparers who are preparing these returns, generating these huge refunds to people that never paid taxes, and it's costing taxpayers millions and millions of dollars every year. And so there's been a lot of audits on these earned income tax credit returns. And so people filing these returns, getting all of these tax credits, have really been under the fire to support. And there's a huge tax gap there. We have the emerging scam issues, the Dirty Dozen. So go online and look at the Dirty Dozen. Issues such as sick leave and family leave, as well as false fuel tax credit claims. Fuel tax credits. So I had a client. This is really amazing stuff. And I had a client. They were scammed, but they bought a false alternative fuel plant. And so what they can do now is, it's amazing. They take waste product from animals, and they're generating diesel fuel and things from waste products. It's amazing. And so to fuel that, no pun intended, to promote that, what the federal government has done is said, look, we're going to give credits to these companies that are generating this fuel from waste, as opposed to drilling in the ground. And so we want to promote that. And so we're going to force all of the fossil fuel companies, so Shell and Amco and all of those places where you go and fill up your gas tank. We're going to force all of those companies to pay or to buy credits from these biofuel companies. So if I'm the biofuel company, here's what I do. I do my magic and I generate 1 million gallons of fuel. And so I'm going to, for every gallon of fuel that I generate, I can sell a tax credit to one of the big, fossil fuel companies, the gasoline companies, Mobil and Exxon and those. I can sell for $1. So I have $1 million in credits that I can sell them, and they have to pay me $1 million because they have to buy a certain number of these credits every year. So I generate 1 million gallons of fuel. I sell 1 million credits, so I get $1 million there. And then I get to sell the gas. And so I sell my gasoline, and then I also go to the IRS and I take credits for all of the gas that I produce. And so I get additional credits. So I'm basically getting that 3 times. I'm selling that fuel basically 3 times. Once on a credit to third parties, once to the person that buys the fuel, and then once as a credit from the IRS, from the federal government. And so in the case that I had with my client, this company, the plant wasn't producing any fuel at all. It was just pure fraud. It produced nothing. They were just putting it in there and stirring it up with some water and pouring it out. And then whenever the IRS or the FDA or whoever was looking at the compliance of these plants, they would come in and say, "Hey, we're going to come and test your fuel, and we'll be there on Thursday at 8 a.m. So what they do is they go down to the local gas station and fill up these big drums full of diesel fuel and bring it back and pour it into their, tank. And then the government comes in, tests it, and goes, "Hey, this is some really good fuel. You guys pass." And then say, "Great." And then, they continue on, and they weren't producing anything at all, is the true story.
So I'm sorry, your client knew about this or did not know?
Well, no, they didn't know. And they paid millions of dollars for this plant, and they get in there, and then they start trying to actually sell the fuel to third parties, and third parties were complaining and saying, "This is terrible stuff. This doesn't work." And they're like, "What are you talking about? We get tested all the time. We get, the highest ratings." And then the people that worked there knew of it. And so the GM came into their office and said, hey, started crying and said, you guys got scammed. I've known about this all along, but I can't work here anymore. I know this is just a big scam. And then there was just a big, a whole bunch of lawsuits that came out of that.
But from a tax attorney perspective, where did you fit into the situation?
Well, they were actually tagged with committing fraud, and so we had to go in and prove that they didn't commit the fraud. They were the victims of the fraud. But after I had this case, I was watching one of these shows, American Greed. Have you ever seen that show?
Okay, yes. Yeah.
Yeah, so really interesting stuff on this show. And so I had watched a lot of these episodes, and I'm watching one episode, and there was a guy in Florida, and all of a sudden, this guy in Florida and his wife, and they had some Bentleys and some Ferraris and some Rolls Royce and some Beamers and Mercedes and Porsches, and then they had so many cars. They were
I don't mean to cut you off, Whit, but I did find the Department of Justice press release about this case.
Oh, is that right?
And you're right. So his name is Robert Haley, and he used the proceeds of his scheme, over $40 million in RIN credit funds. So those are the funds that the IRS sends you, right?
Renewable
something
right.
credits.
Yeah, renewable
the
something fuel credits, right.
He used the proceeds of the scheme to purchase BMWs, Ferraris, Bentleys, a Mercedes-Benz, a Rolls-Royce Phantom, a Lamborghini, a Maserati, and others, as well as real estate and more than $80,000 in diamond jewelry. And he used cash or checks drawn on accounts he controlled to make all these transactions.
And so how he got caught was all of his neighbors started complaining because he had all of these cars parked up and down the street. Like, how stupid is that? I'm just going to flaunt, I'm living in a neighborhood, and I think his house was like a, $800,000 house.
It was actually $645,000, and he bought it with a check. He wrote a check.
Yeah, wrote a check for cash. So, this is a nice neighborhood, but and all of a sudden you got a Rolls Royce and Lamborghinis just parked up and down the streets. And the client and the neighbors were like, we can't drive up and down the street. There's cars parked all over the place, and it was clogging up the streets. And so they started complaining, and that's how he initially got caught. But what that guy did is he didn't even have a factory that pretended to generate anything. He had like an address that was where his purported factory was. And it was like a mailbox, he was renting a mailbox or something.
There's a UPS store somewhere?
Yeah, probably something like that. And so he didn't have, all he did was have a printer. He had a printer, and he printed up all of these RIN credits that he sold to Exxon and Mobil and all these, companies, and was just selling pieces of paper that were fake. And so how amazing that, our system is generating all of these credits and paying people millions of dollars that never paid any taxes themselves. But these are the types of things the IRS is now going to start trying harder to stop. By the way, not in this piece, but the what is it? The ERTC credits that came out of the COVID relief funds. So the earned, what is
employee retention?
The employee retention tax credits. That's right. So the IRS finally, about 3 weeks ago, suspended the ERTC credit program. And so they are stopping that because it's just so much fraud. They're not sure how they can continue with it without, just paying hundreds of millions of dollars every year to fake, claims. Identity theft is another big problem with the IRS. We see that a lot. People walk in the office. Heck, it happened with my wife. She gets a notice. Someone filed a tax return with your social security number. And so we do see that quite a bit. And at first it was a big problem because the IRS didn't have a lot of resources in place to deal with it. And, several years ago, the response was, hey, well, you go find them. Well, you're the IRS. This is a fake tax return. You go find them. Not my job. But now the IRS has protocols in place, and they have, forms to report this type of tax fraud or the identity fraud with your tax returns. And so but that's another place where the IRS is going to spend some of that money. Look, the press had a lot of bad press about this 83,000 or 86,000 new IRS agents and all of this. Look, carrying guns coming to get you. That wasn't really what was going on. The IRS is understaffed. We need the IRS to have more people because we can't get things done. We file a power of attorney. We file a tax return. We file an installment agreement request. We need someone there to process that and to work with us to get this through. And they don't have enough people. We need more people working for the IRS. So I think that there was some bad press on how this money was going to be spent. Some of it's going to be spent for good reasons. And this is an example of the good reasons that the IRS is going to allocate some of this money to and help the taxpayers.
That makes sense. So just to recap here, basically, if I'm a taxpayer and I get an audit notice or I get a phone call from the IRS, the best thing to do is just get their contact information, and you already have it. If it's, if they sent you a letter, don't respond. If they call you, get the contact information, reach out to a tax attorney.
Yeah, don't give any answers to anything. Don't answer any questions. Yes, this is my name. What's your name? What's your phone number? Give me all your contact information. And by the way, talking about ID fraud, there's a lot of ID fraud here too. People saying we're from the IRS and you're going to get arrested unless you give us this information. Believe me, that's not what's going to happen on your first phone call. That's not how they tell you might get arrested. But so get their information, get yourself a tax attorney, have your tax attorney send a power of attorney, IRS form 2848 to the person, and you won't have
to talk to him ever again.
Well, you will have to talk to him one time.
You'll have to do your interview.
You have to talk to him one time.
Okay.
Believe me, when that interview, and so here's what you need to do when that interview comes. So, when I worked at the IRS, I had an interview sheet, and actually, when I left, I did some training with some of the younger agents as I was walking out the door and shedding my my caseload, and I did some training and I kind of rewrote the interview questions for the agents at that time in district office that I was working in, and they had reproduced those interview sheets, and so what I would do when I'm preparing a client is I would take those interview sheets and I would sit down with the client and say, look, here's the questions, and this is what they're asking. This is what they really want to know. Okay, so we're going to ask a question. But what we're asking that question for a reason, right? You don't know that reason. I do when I'm asking that question, and that reason may not be obvious.
Ulterior motive?
For sure. And so I would walk through it and I would tell them, look, here's the questions. This is what the answers are for you. Here's to answer these things, say as little as possible. The best answer is yes or no. And then that's the end of the answer. If you have to say more, then you do. But I would walk them through the whole process. And so they knew the questions. And then they weren't surprised and they knew how to answer all the questions. And then you want to have your tax attorney there with you because so the questions are going to be cloaked a little bit, or they might be not clear. They might be a little bit ambiguous. And so we're talking about revenue agents or tax auditors. These people aren't the best communicators all the time. I mean, face it, accountants aren't the best communicators, all right, all the time. And so what your tax attorney is going to do is they're going to stop you before you answer a question that is a little bit ambiguous. And your tax attorney is going to clarify. And my job, the question comes in, so isn't it true that you haven't beaten your wife in at least 6 months? Well, there's no good answer to that. Well, I'm going to say, hold on a second. I'm going to turn to my taxpayer and say, have you ever beaten your wife? No. Have you ever beaten your wife before 6 months or after 6 months? Isn't that right? Correct. Okay. Well, the answer to that question is my client has never, ever beaten his wife. And then I'll answer that question. But there's going to be those, gotcha questions that they're going to ask it in a way that there's no good answer, right? And so you need to have your power of attorney there understanding what's going on and ready to stop those types of questions and then to redirect or to clarify and then help you out with that answer so you don't, put yourself in a box.
Got it. So to wrap things up here, for the final question for you, if you could give one piece of non-legal advice. So I know it's kind of antiquated, but I know we used to call attorneys, counselors at law. So from a counseling perspective, non-legal advice, but still advice, maybe just life advice, what would you say to someone who's facing a tax audit from a counseling perspective?
Yeah, look, when I first left the service and I was in law school and I was handling audits on behalf of taxpayers, what I would do, and I kind of still do this, the first thing I tell them is relax, slow down, don't expect anything to happen quickly. You're dealing with the government. You got this huge ship. The huge ship takes a long time to turn around. All right. So just don't think anything is going to happen quickly. Time is on your side. And what happens is clients just want it to be over with. And they just want to agree to anything, no matter how detrimental, just to have it be over with because they're just afraid of the unknown. And so the first thing I tell them is relax. It's a process. And here's the way things work out. Okay. There's going to be a question that the taxpayer wants to have resolved. And the thing is, a person over in the green box has to resolve it. But you're not talking to the person in the green box. You're talking to the person in the red box. And you can't talk to the person in the green box until the person in the red box gives your case to the person in the white box. And that person in the white box then gives the case to the person in the green box. Because the person in the green box only gets things from the person in the white box. And so you have to understand how the system works, right?
And these boxes, these are the different departments within
different IRS. Departments or people in the IRS, right? I'm just, and so, right. And so you have to understand who can answer the question and who can do the thing that you want them to do. Who is that person? Where are they? And so the trick is getting your case in front of the person that can actually do what you want them to do. Okay. And so there's going to be some of that. And so there's not going to be this, well, can't we just ask this person to do a such and such? No, because they don't do such and such. They don't have the authority to do that. So we have to get it to the right person. So first of all, understand the job here is to get your arguments in front of the right person at the right time. So the person, the first person, maybe it's one argument because you're just trying to get it to the second person. And the second person, you're going to make a different argument because you want them to give your case to the person in the green box, and they do. And then when you get to the person in green box, then you're going to say this. But you can't say this to the first person because it doesn't work. It's like, asking for Santa Claus. Santa Claus ain't there. So don't write a letter, dear Santa, to the North Pole. Put a stamp on it. It doesn't go anywhere. And that's what happens when you write. And I have people that come to my office. Look, we've been dealing with this audit or this, this problem that I have with the IRS for months, and have 8 letters that we wrote. And so they showed me these letters, dear IRS, Ogden, Utah, 84201.
They're just going to a service center that no one.
They're going into the Santa Claus box. Yeah. So understand this is going to take some time. Don't, expect things to happen quickly. Understand what you have to do the first step and what you're going to do the next step and what you're going to do the third step. Understand the process. Let your tax attorney or CPA handle that process and guide you through that process. Give them the information they need when they need it. You got to get them the information. Look, the taxpayer and the taxpayer's tax preparer has the information. And let your CPA, your tax lawyer, figure out how we want to gather that information, how we want to present it to the IRS. And you present it to the IRS in a very specific way. And I'm going to tell you, there's going to be certain things I'm going to give the IRS first. And I'm going to give them other things later. And there's going to be a reason why I'm going to give it to them in this way. I mean, if I know I've got 900 pieces of information and 850 of them are 100% dialed in, right on target, I'm going to hand the IRS 850 pieces of information at first, right? And let them spend a whole bunch of hours auditing that stuff that I know is going to reconciled to the penny. And I'm going to give them that last piece last because I'm hoping that the IRS is going to go through and say, all right, well, this ties out, this ties out, this ties out. And what they're going to do is they're going to spot audit different things. And when they spot, they have 10 things to look at and 7 out of 10 things are to the penny, they might just say, okay, well, look, I've done my spot audit. We're going to no change this and move on. Or if I know that there's one glaring issue that I'm not going to be able to get out of, I'm going to give them all the stuff that dials in, straight up. And I'm going to give them the one item that is for sure we agree to. Hope they don't, look at the other case items that are a little bit, muddier and more difficult, but I just don't want to have to argue about those. But clearly this one we're going to lose. And so that's how I'm going to piece it together. And I make my initial disclosure to this service. And then we're going to have our audit interview. And I'm going to train you pretty well before you have that interview. And then, we proceed. Now, let me tell you, from those listening, we haven't talked about collection. We could talk about collection another time. Collection is a bigger animal. And I think, so from a tax lawyer's perspective, we have a lot of tax court cases and a lot of IRS and appeal cases that are tax compliance issues. But a good part of the practice is defending against collection. And so, the listeners, I'm sure, hey, the IRS just swept my bank accounts. What's going on? Can the IRS go and talk to my clients and tell, can they go and ask for my accounts receivable and then go to my clients and ask my clients to pay the IRS directly instead of me? Yes, they can do that, but there's only certain places and times when they can do that. So this, what can they do? Well, what are my options? What if I can't pay? What are my options? Look, this is a 30-minute conversation in and of itself. We should probably have that on a different time slot. But the first thing is don't talk to the IRS until you get someone that's a professional that can be there to, handle that communication. And so I got to say, that's the number one thing.
Thank you so much to all of our listeners for tuning in. It's been a great conversation. We hope you found it as enlightening as we did. If If you enjoyed today's episode, please subscribe to TaxWit's Wealth Protection Podcast on YouTube and Spotify. And if you have a question, feel free to leave it in the YouTube comments. Don't forget to check out the show notes for links to resources mentioned in today's episode. You can find those on Whitney's website at sorrell-lawgroup.com. That's SORRELL-LAWGROUP.com. Twice a month, Whitney and I will be discussing other exciting topics that you won't want to miss. But for now, it's time to say goodbye. Until next time, this is your co-host, Benji Albrecht, signing off. Take care and keep building that wealth the smart and legal way.